ITC has declared its quarterly results, and revenue for the company for this quarter was 16,579 against Bloomberg estimates of 17,190. So there is a miss when it comes to revenue. If we look at net profit, then net profit for the company in this quarter was 5,020, whereas Bloomberg estimates was 5,149. So we can see that there has been a miss both in terms of revenue and net profit. The company's market cap is 5,50,000. So company is a large cap company and is currently trading at a PE of 27. Company has a good dividend yield of 3%. Company's current trading price is above its long-term average. We have seen the stock has given a good performance in last few years, and it is mainly driven by re-rating of company's PE rather than its profit growth. If we look at its 5 years and 3 years sales growth, then it is 8% and 13% respectively, and compounded profit growth was 10% and 16% for 5 and 3 years. So we can see that growth wise company is not very attractive. Re-rating has happened in last few years, that's why stock price has gone up. If we look at its technical, then 400 level is acting as a strong support for this company. Current stock price is around 440. If it comes down to 400, then it can be a good buy. Though growth rate is not high, but still company is providing good dividends. If you are looking for a stock which is safe to invest and also provides good dividend, then ITC is a good stock. It is better than investing in PSU companies for high dividend yield. Next company which declared its quarterly result is Page Industries. Company's revenue was 995 crores against Bloomberg estimate of 1136 crores. Net profit was 108 crores against estimate of 131 crores. So we can see that there has been a miss both in terms of revenue and net profit, and miss is also by a good margin. We can see that when it comes to net profit, there is a miss by around 20%, and that is the reason why company's stock price came down. Company's current market cap is around 40,000 and PE of 70. It has good ROE and ROC numbers, but company is not doing well when it comes to its profit growth and sales growth in last few years. We have seen that the profit growth for last 3 years has been 19%, and for last 5 years it's dismal 8%. Similarly, sales growth for last 3 years was 17% and profit growth was of 10%. Once this company used to be a multi-bagger stock, it gave very good returns for investors, but in current scenario, company is not performing well when it comes to growth. If we look at its technical, then current trading price of around 35,000 is also acting as a strong support for this company. It reached levels of around 36,000 in the year 2019, and then after that it corrected, it went up, and then again is trading at same levels. So this is acting as a long-term support. But looking at company's results, we can see pressure in this stock in coming months, since there are other companies which are operating in same area which are doing well. If we talk about retailers, then we see the growth which companies like Trent are having. So naturally investors will look to invest in those companies which are showing good growth. Minda too declared its results. Company's revenue was 3,794 crores, which is a jump of 31.3% YOY. Net profit was 302 crores, which is a jump of 55.5%. So we can see that though estimates are not available for this stock, but results are looking good. If you look at company's fundamentals, then company is having a market cap of 47,000 and is currently trading at a PE of 55. Company is the manufacturer and supplier of automotive solutions and systems to original equipment manufacturer. Its current PE of 55 is near its long-term average. Company showed good profit growth in last 5 and 3 years. Profit grew by 25% in last 5 years and 62% in last 3 years. Sales growth was also good. Sales growth in last 5 years was 19% and for last 3 years it was 30%. If we look at company's technicals, then company's share price was trading in a channel and after today's results, company stock has broken out. Its current stock price is 851. Since company has declared good profit, we can expect stock to go up. Similar thing had happened with companies like Keynes Technologies. Keynes also showed a good set of numbers. Its profit grew by around 80% and we saw that company stock was hitting higher circuit continuously for 3-4 days. So we can expect stock of Minda also to deliver good returns in short term. In long term also company is looking good. P ratio of the company is also not very high. It is in line with its historical average. So this stock is also should be in investors' radar. Let us discuss an upcoming IPO, Awfis Space Solution IPO, which application for which is open and last day for application is 24th of May. Lot size for this particular IPO is 14,196 and current grey market premium is 150 rupees. Company's price band is fixed at 364 to 383. Considering grey market premium of 150 rupees, there is a potential gain of 39%. So investors can check out this IPO. If they are lucky and if they get the allotment, then there is a possibility of getting a good 40% return from this IPO.